Hey guys, how's it going? It's Andy from McGoo Investing. Happy Monday. Hopefully everyone had a fantastic weekend. I got to spend some time outside, went hiking in Yosemite, saw some great views, got some good exercise, saw some bears. It was a great experience. But we're back on Monday and it's time to talk about the stock market. Usually I like recording videos after the weekend on Monday morning just to wait to see what kind of news events come out. And I woke up this morning and there wasn't really anything. So far the market seems to be pretty green just across the board and not a lot of news behind it. And as I was actually setting up to record this video, I had an alert go off. And in my past video, I talked about stocks I'm looking to buy. And there was a lot of comments asking, well, if you like the stock, why don't you just buy it right now? And for Southwest, ticker symbol LUV, I was waiting for a specific thing to happen. I charted a support on the charts and I wanted it to go into the zone that I charted, hold up on the resistance, and then push above it. And that actually just happened. So now I am a proud shareholder of Southwest for a second time. I'll probably be making a full video on Wednesday or maybe next weekend explaining kind of the thought process of why I did what I did and explaining the sizing of my position and kind of explain my entire thought process with buying a beaten down stock like Southwest. So today's video, I'm going to be talking about 3 stocks that I'm looking to buy for long-term investments. As I talked about on Friday's video, my portfolio was looking pretty empty. I was pretty worried about the overall market with a lot of major news stories that I was just kind of following to see what would happen. And at this point, they've pretty much all passed. So now that I'm feeling a little bit more confident, I'm not super confident in the market, but I feel confident enough to start adding to some positions, which is why I just bought Southwest. And I'm looking to fill out the rest of my portfolio. So in today's video, I'm going to be talking about 3 fast food stocks that I think are actually really interesting opportunities. We're going to be talking about some that have done incredibly well so far in 2020, and then we're going to finish off the video with a past favorite of mine that has not done so well, but I think could be a great opportunity. Before we get started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just my own opinions about what I'm going to be doing in my portfolio going forward. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. You've been killing it with the support recently, and let's go for 100 likes on this video. Alright, with that out of the way, let's get started and talk about the 3 stocks that I'm looking to buy for a long-term investment. So before talking about the first stock, I think it's kind of important to look at the criteria that I'm going for to determine which stocks I want to buy. Currently, the 2 stocks that I own are Nike and Microsoft, 2 blue chip stocks that I would be comfortable holding for a long time. And that's kind of what I'm looking for. I'm looking for overall stability and a name that you recognize and feel confident with. So the 3 stocks that I picked for today, for some reason I decided to go with the fast food industry just because some of the earnings from last week were pretty interesting and I wanted to talk about it. So the first stock I wanted to talk about is the company that had earnings last week, and that is McDonald's, ticker symbol MCD. Currently, McDonald's, ticker symbol MCD, is trading for $195 and it's down 1% on the year. And last week they released earnings and it did not look very pretty. It was pretty expected that the company was going to be having a tough time as a result of the pandemic, but some of the numbers were pretty tough. Overall revenue dropped by around 30% and their net profit dropped by around 60%, and those are huge drops overall. And so you might be wondering, if the company has struggled so bad recently, why would you want to take a position? So while it had these tough numbers, they saw a lot of positives overall, and it came from their 3 Ds, which they call delivery, drive-through, and digital. This comes as their business has to change as a result of the pandemic because they have to close the inside of many of their restaurants. And while the drive-through has always been a significant portion of the revenue for McDonald's, it has become around 90% of their overall sales. And so they've relied on that heavily during the pandemic, and it's kind of interesting to watch to see how businesses kind of switch the way they operate during the pandemic. It's really interesting to see where McDonald's struggled, and it actually came a lot from the breakfast area of their business. It's not something I would have really expected, but it accounts for around 25% of their sales overall, but 40% of the profit. And as people are not commuting to their jobs anymore, as people are able to work from home, they saw a steep decline in that overall, and that's kind of why the company struggled so much in the past 2 quarters. But as I mentioned, I think it's really important to look at how the market reacts to this news. And while the numbers were pretty tough, and if you really wanted to push the stock down significantly, I wouldn't have been surprised. But overall, the stock was only down around 2 to 3%. In the last video, I talked about how if Wall Street kind of has time to come up with estimates and kind of think about everything that's going on, the negatives haven't been that bad. It's the really surprise negatives that has pushed the market or individual stocks down significantly. And so this shows that the market seems to be pretty comfortable with McDonald's at the current price. And so while they've survived pretty well during the pandemic and are pretty flat on the year, I think that shows a lot to how bullish people are on the company overall. And that was one of the reasons why I decided to put it on this list. So let's summarize the 3 reasons why I like McDonald's stock. The first one I just talked about is the fact that they came out with horrible earnings for the past quarter and the market just kind of shrugged it off. So what that tells me is people are pretty confident in their business model and the fact that they will be able to recover relatively quickly. Number 2, McDonald's is protected from a lot of the risk as a result of franchising. This pushes a lot of the risk onto the individual store holders. And when I put up this chart, you can see that the trend has been for more franchisee owners instead of the corporate-owned businesses. And one of the really interesting parts about the McDonald's business model is not the restaurant specifically, but it's the real estate that these restaurants are a part of. When I was reading Rich Dad Poor Dad, that was actually part of the book that was really interesting, where they asked, the CEO came up to people and asked, what does McDonald's do? And everyone was like, oh, they make burgers and sell food. In reality, his answer was, we own real estate. And so they're protected from a lot of the risk from the pandemic as a result of franchising, and I think that's really attractive. And number 3, this is a great dividend stock that pays out $5 annually for around a yield of 2.5%. And when you look at the payout ratio, which is the proportion of earnings that come from earnings per share, it's pretty high right now in the 85 around percent. And as a result of that, it's kind of risky. And I usually put like 75 to maybe 80% as the cutoff to put it at risk of being cut in the future. But the company has had problems with earnings because of the pandemic, and I don't expect them to cut their dividend anytime soon. So overall, McDonald's is a great blue chip stock for the fast food industry, and the fact that you can buy it at a discount, it's only down 1% on the year, but the fact that the market just kind of shrugged off the bad news from the earnings makes me very bullish on McDonald's overall. Let me know what you guys are thinking about McDonald's, ticker symbol MCD, in the comment section down below. All right, the second stock on this list is going to be Domino's Pizza, ticker symbol DPZ. Currently, the stock is trading for $385 and it's up 31% year to date. I think it's really interesting that some of these fast food companies, specifically Domino's and Chipotle, have very cheap products. You can go into Chipotle and get a bowl for under $8, but their stock price is over $1,000 and Domino's is close to $400. And I just think it's really interesting that these cheap products, the stock price is so expensive. Anyway, during the last earnings report, Domino's did very well, and as a result, the stock market pushed it up significantly. Some of the impressive numbers is that they saw a 16% increase in sales in their different stores, which is very impressive considering, we're in a pandemic. And we did not see the same thing for stuff like McDonald's. And the numbers that came out, it seems like people are increasing their volume of their orders, as the CEO said, because they think that they're going to be having leftovers for the next couple days, which is it's just a great thought process. And it's actually something that I've been doing for the past 5 years as a college student. You can walk in there, get a 3-topping pizza for $8, and now you have 2 days worth of meals and it's dirt cheap. Another positive that I really saw is that they have 40 million people signed up with their loyalty programs. And similarly to what we're going to be talking about with the final stock on this video, that is very positive to me overall. When you have people able to sign up, you're able to track their orders, and it increases the same store spending significantly. And so Domino's has been rapidly expanding during the pandemic, which I thought was really interesting. And similar to McDonald's, they are very heavily invested into franchising. And so they take around a 6% fee for licensing, and that's where a lot of their revenue comes overall. You haven't seen as much expansion internationally, it's mainly been in the US, but they have a very stable international market and they just have a very nice business model overall. When I'm looking for a long-term investment, I like looking at the 5-year chart to see what the stock has done in the past 5 years. And on that chart, you can see the overall stability, but with stability, you also have a 240% increase. So it kind of checks both boxes for that. I don't really want a stock that's like just pretty much flat. I could probably find a better opportunity than that, but a 5-year chart that does not have any catastrophic meltdowns where the stock fell like 25% as a result of an earnings report, and it goes up 240% in 5 years, that looks very good to me overall. So let's talk about the 3 reasons that I like Domino's. The first is that they've been killing it so far with the pandemic. That 16% increase in same-store sales is very impressive. Number 2, they have a history of great returns and overall stability, like I just mentioned. That 5-year chart is absolutely beautiful, and 240% increase in 5 years, perfect. And number 3, similar to McDonald's, they're very heavily invested into franchising, and they've been expanding the number of stores that they have overall. They take a nice 6% fee for licensing, and has been a fantastic source of revenue for the company over the past. So I think Domino's is a great opportunity. So far, it's been killing it in 2020, up more than 30% so far this year. And while I think it does have room to go to the upside, obviously buying a stock that's up significantly so far this year does have its risks. But the numbers that I've been seeing from their earnings report and just kind of the trend of where the business is going makes me feel very good about Domino's overall. So let me know what you think about Domino's Pizza, ticker symbol DPZ, in the comment section down below. And then last on this list, I wanted to talk about Starbucks, ticker symbol SBUX. This has been a company that I've owned in the past, and I've talked very positively about it before. Currently, Starbucks is trading for $75, and it's down 14% year to date. Starbucks was really interesting to just kind of look at because they were one of the first US companies to kind of ring the alarm bell about the overall pandemic. When I put up the 1-year chart, most stocks kind of fell towards the beginning of March. But when you look at Starbucks, it started falling back in January during their earnings report when they worried about some of the problems that the pandemic was going to have on their business overall. And so they kind of rang the alarm bell first, but they have not recovered all the way since that point. Compared to Domino's and McDonald's, Starbucks has had a really tough time. And when I talked about the problems with McDonald's, especially coming from their breakfast aspect of their business, you can see why Starbucks is having a tough time. When the number of overall commuters is down, people are not going to be buying as much coffee. Sure, every time I go past a Starbucks, there's a ridiculous line for the drive-thru. The total volume of sales is not where it used to be. In their last earnings report, it was pretty brutal. They had a loss of 46 cents per share, and then they lost $3.1 billion in profit overall in the last quarter. And so the company is in a pretty tough spot right now. When you look at the charts, the company has been pretty flat for the past couple months. And so I feel like they're just kind of waiting to see what news is going to be coming out with the pandemic. So overall, I want to talk about the 3 reasons that I like Starbucks. The first reason I like Starbucks is the fact that you're getting at a significant discount. For the stocks I talked about in this video, I feel like I have a nice balance of Domino's that's up 30%, McDonald's that's pretty flat, and then Starbucks is down 14%. When you look at the 1-year chart, the company hit highs of $100 around a year ago, and you're down at a significant discount. And obviously the pandemic has a huge part of that, and I think it could be a great opportunity for a long-term investment. Number 2, similar to McDonald's, after the tough earnings report, the market didn't punish Starbucks as bad as I kind of expected. What that tells me is that the market is just kind of waiting to see what happens overall. And that kind of goes in with number 3 and the fact that the stock has been pretty flat overall. Since the pandemic hit, you obviously had lows down in March, it bounced up and it's been pretty flat. And with the earnings that didn't really move the stock that much, it seems kind of poised to wait for good news. It's going to push the stock up significantly. Anytime I see a stock that just kind of goes up and down in a flat pattern for a while, that's when you see major breakouts to the upside. And so obviously the stock has a lot of risk associated with it because of its overall exposure to commuters, the international market, and stuff like that. But if the pandemic starts to ease up in the future, I expect Starbucks to be one of the big winners in the next couple months. So let me know what you think about Starbucks, ticker symbol SBUX, in the comment section down below. Overall, I wanted to pick 3 fast food stocks that I think have a variety of pros and cons. You have the top performers so far this year with stuff like Domino's, it's up 30%. You have McDonald's, which is one of the blue chip stocks that has a nice stable dividend of 2.5%, but is pretty flat on the year. And then you have the beaten down stock with Starbucks, that's down 14%, had some major exposure to the Chinese market, and was one of the first companies to ring the alarm bell on the pandemic. So overall, these 3 stocks I think have a place in a lot of people's portfolios. And one of my favorite parts about making videos on this channel is I have to come up with reasons for why I like these stocks, and it kind of helps me pick a direction with which stock I'm going to buy. At this point, I don't really know which one I'm going to buy. I'm still waiting to see what happens overall. But if I personally had to rank things, I would go McDonald's, Starbucks, and then Domino's. I just like buying stocks at a discount too much to kind of warrant buying Domino's that has done so well so far in 2020. So let me know how you'd rank these 3 stocks, and let me know which stocks you guys are looking at for long-term investments. Thanks for watching. I really appreciate all the support on the channel recently, and I will see you on Wednesday.